All right, the second chart we're going to talk about, the Shiller PE ratio. We can see that the price right now is getting awfully close to where it was at the dot-com bust. Now, for people who don't know what this is, there's multiple names for it. It's not just Shiller PE. The most common would be the CAPE ratio. It stands for cyclically adjusted price to earnings. And essentially what this is, the very simple ratio, it's just the price of the S&P 500 divided by the real 10-year earnings. Real meaning it is adjusted for inflation. So you can see how a formula like this would work. If this number on the top, on the numerator, is big, and the number on the bottom, the denominator, is smaller, then that's going to lead to a larger CAPE ratio, which means the S&P 500 is overvalued. And then on the flip side, let's take something like March 9th, 2009. That was the very bottom of the financial crisis. You got a situation where back then, the previous 10-year earnings were still pretty decent at that point. But the price of the index was so low that it leaves the ratio with a small number. That means that the S&P 500 would be undervalued. Now, of course, this is happening because valuations have gotten out of control. You remember the dot-com bust, basically the reason it got so crazy was everything to do with the internet back then was getting a valuation that was far exceeding its actual revenue and earnings. And then when the market crashes, all of those dirt companies, they basically go to zero. There were a few dot-com companies that did well. They were actually good companies. A few of them survive, most of them don't, and it crashes like crazy. Well, now we're doing the same thing with AI, aren't we? We got 80% of these AI companies that aren't really making any money, but they're getting multiple billion-dollar valuations simply because they're AI related. The concept that a rising tide raises all boats. NVIDIA obviously is a good company, a very important company. Taiwan Semiconductor, important company. There are a few really good ones out there, but a lot of them are just insane valuations, and it's leading to this basically phantom earnings. I'm not telling you to go sell your stocks and move to cash, but what I am saying is valuations, quantifiably speaking, are out of control right now. Now, just don't forget, out of control can lead to further out of control. As the old saying goes, markets can be irrational longer than you can remain solvent. I'm not saying a crash is imminent. This thing could go way, way higher if this AI thing keeps going. But mark my words, at some point, people are going to turn around and realize, oh wow, 80% of these companies were pure garbage. For full-length videos and to ask your questions in our public live streams, make sure you're subscribed to the main VTS YouTube channel. And of course, claim your free trial to the VTS community either down in the description below or on my website. Come join the VTS community and start growing your wealth the right way.